Imagine waking up tomorrow and discovering that you're worth billions. No, not from a lottery ticket, but from smart decisions made years ago. Sounds like a dream, right? Well, for Warren Buffett, that dream became reality. And what's even more mind-blowing is that he did it with patience, wisdom, and strategy, not by relying on luck. But here's the real kicker. He didn't just get rich. He beat 99% of the world's wealthiest people to the punch. How did he do it? What's his secret? Buckle up, because you're about to learn how the Oracle of Omaha dominates the stock market and how you can use these secrets to completely transform your financial future. To understand why Warren Buffett is an absolute beast in the stock market, we need to first explore the bedrock of his success: his mindset. This man is famous for saying, "The stock market is a device for transferring money from the impatient to the patient." Let that sink in. It's not about quick profits, flashy stocks, or jumping on the latest trend. Buffett's wealth came from something far more elusive: delayed gratification. Now, here's where it gets interesting. Most young investors make the mistake of chasing hot stocks, trying to time the market, and focusing on the next big thing. But Buffett, he focuses on long-term value. For him, investing is more like planting an orchard than picking fruit off the tree. He makes calculated, thoughtful decisions, then lets time and patience do the heavy lifting. Quick question: if you could be worth $100 million in 10 years or $1 million in 6 months, which would you choose? Buffett would say to take the longer route. And this mindset that's helped him outpace nearly everyone else. And this isn't just a philosophy, it's a strategy. You see, Buffett's investment approach is driven by the idea of compounding returns, the eighth wonder of the world, as Einstein called it. It's like planting a tree and watching it grow year after year. The early years may seem slow, but once that tree matures, it starts pumping out fruit at an astonishing rate. The longer you wait, the faster it grows. But let me warn you, patience is not easy. It's boring. It's frustrating. Most people get caught up in the excitement of hustle culture, the constant grind for instant success. But Buffett, he's in it for the long haul. He doesn't look for quick wins, he looks for consistent, sustainable growth. So, how does Buffett pick the companies to invest in? Here's the thing. He doesn't buy into hype. He doesn't care about trends. What matters to him are 3 core principles: quality businesses, consistent performance, and a strong competitive edge. This is the formula that has made him the most successful investor in modern history. Buffett doesn't invest in businesses he doesn't understand. This is the first rule in his investing playbook, the circle of competence. If it's outside of his knowledge or expertise, he stays away. He's not out there trying to be a tech guru or a biotech whiz. Instead, he sticks to industries he truly understands, like insurance, consumer goods, and energy. He looks for companies with predictable earnings, steady cash flow, and strong management. The second rule is the economic moat. Imagine a moat around a castle. It's a protective barrier that keeps competitors out. Buffett loves companies with strong economic moats, businesses that have built-in defenses against competition, whether through brand loyalty, proprietary technology, or a cost advantage. Think Coca-Cola or Apple. These are the types of companies that keep making money no matter what the economy does. They're stable, predictable, and hard to beat. This is why Buffett invests in them, because he knows they're likely to keep growing even in tough economic times. And that's a huge part of his strategy. He's not interested in the next flashy stock or a company that's all hype. He goes for businesses with a sustainable edge. And here's the third piece of the puzzle: management quality. Buffett always says that he looks for leaders who are honest, competent, and aligned with shareholders' interests. He doesn't just look at the numbers, he pays close attention to the people running the show. A company with weak leadership, no matter how profitable, is a risk. But companies with visionary leaders, that's where the magic happens. So, in essence, Buffett's strategy is a blend of business acumen, psychological fortitude, and an unshakable belief in value investing. It's not about speculation. It's not about guessing the next big thing. It's about finding businesses that will stand the test of time. Now, let's talk about how Buffett has leveraged his immense wealth to create a competitive advantage that 99% of investors can't even fathom. Buffett's biggest edge isn't his ability to pick stocks, though that's a huge part of it. His real secret is his ability to raise capital and use it efficiently. Buffett's company, Berkshire Hathaway, is a financial powerhouse that allowed him to take advantage of huge opportunities that ordinary investors simply don't have access to. Through Berkshire, Buffett can buy entire companies or make massive investments in undervalued companies, then use the revenue to reinvest in more opportunities. It's a virtuous cycle of capital, influence, and success. And while you might not have billions like Buffett, you can still apply a similar strategy just on a smaller scale. How? Stick around and I'll show you how to start. But here's the kicker: Buffett's real advantage is that he's playing the long game. Unlike most investors who panic during a market dip, Buffett sees market corrections as opportunities. His patience and ability to stick to his strategy while others are jumping in and out of the market like they're on a roller coaster gives him an upper hand that most investors simply can't match.
He stays calm and consistent, which means he doesn't get swept up by short-term volatility. Let me ask you, when was the last time you made a decision based on emotion? Maybe you panicked when the stock market dipped or got too excited when your crypto holdings spiked. Buffett's genius lies in his ability to keep his emotions in check, no matter what's happening around him. And it's this discipline that allows him to keep winning year after year. But here's the truth. Warren Buffett's secret isn't just about smart investing or picking the right stocks, it's about having the courage to stay the course while others are too busy chasing the next big thing. If you want to dominate the stock market like Buffett, it starts with understanding his secret: sustainability, patience, and trust in the process. The truth is, most investors give up too early or let emotions cloud their judgment. If you can stay calm, stick to your principles, and focus on long-term value, you'll be ahead of 99% of people who are constantly chasing trends. So, what does this mean for you? Well, the good news is that you don't need billions of dollars to start investing like Warren Buffett. You just need patience, a clear strategy, and a long-term mindset. Start small. Focus on learning about businesses, their economic moats, and how to think about the market over decades, not months. If you're ready to take action, subscribe to this channel and hit that notification bell, because we're going to keep diving into the world of investing, finance, and how you can make smarter decisions with your money. You've seen how Buffett dominates the stock market. Now it's your turn to start your journey toward wealth. Don't wait. The time to act is now. Let's build your financial future together. You've got this. Now go crush it. And remember, investing is a marathon, not a sprint. Stay focused, stay disciplined, and stay informed. Hit subscribe for becoming rich. See you in the next video.